Hello and welcome to this special session on budget day trading or budget day non-trading as you like to call it by Sensible and Zerodha. My name is Abid. I'm the CEO and co-founder of Sensible. So what do we do in this thing? One, straight away, we will not talk about expectations or expected policies or announcements, etc. This is not an economic analyst show. There are plenty of people who are already doing it and getting it wrong. We'll not add to that list. But we will talk about two things. One, historicals of budgets, the data. Two, we will talk about some extremely commonsensical tips on trading on that day, right? Or if you chose to do so, not trading on that day. So let's get started, right? So the first important thing which you have to answer is, how big a deal is budget anyway? Is it like a day where some huge stuff happens? Is there like a lot of volatility that happens? Is there like mega movement in the market? Do people print money by directional betting, etc.? Or is it like a non-eventful day, right? So to answer that, we have got some statistics over the last 13 years or 14 years, and let's just look at it, right? So last budget, for example, budget day was a flat day. There was hardly 0.25% movement or something. Budget week was a flat week. There was hardly, it was flat, practically flat. On budget day in 2022, it was up 1.5%, which is reasonably big, but it's not like some spectacularly big move. On 2021, it was up around 5%, which is big. For 2020, it was down around 2.5%. On 2019, it was down around 1%. 2019 was down around 0.5%. 2018, it was flat. 2017, it was around 2%. So, barring 2021 and 2020, which had 2.5% and 5% move each, we did not see budget causing anything beyond like a 2% move anywhere in the last, anywhere since, interestingly, since 2010 actually. Even in 2010 to 2022, there are only two occasions when budget was huge. One is 2021, where there was a 5% move, and 2020, there was a 2.5% move, right? Everything else was around 1%, sometimes even less than 0.5%, etc. Now, even on days when market closed relatively flat or something, there will be daily volatility. That is something you have to be careful about, because it can swing up, swing down and close flat. So that is a fairly high. So you can see the daily volatility, that is high minus low. It's listed around here. So you can see that in this column. You could also see the budget previous week returns here. You could see next week's return here. So you can go through this at your own time and figure out what to expect, at least from a historical perspective. Not that history would repeat, but at least it gives you a sense of what can happen, what has happened, what is in the realm of possibilities, at least for the last 10 years, right? It gives you some grip on reality, right? So this is our historical analysis. Now let's go to common sense tips, right? So my first tip is that, see, don't bet big on budget day. And that is the reason why I'm saying this, right? See, most people who are new to trading think that money is made during big events by betting big. Truth is that betting big on events when uncertainty is fairly high is not something most professional traders do. It is borderline gambling. And I'll tell you the reason why, right? See, there are so many days when the market gives you a very clean, one-sided movement without any event, without any uncertainty, without any kind of drama. So it's much easier for you to wait for those kind of events and take that bet rather than, going all in on like an event and say, aaj kuch to hoga boss, chalo. That's not the way to do it, right? The other thing I have to say is, see, do not sell naked options. Do not bet on futures, because like we said earlier, budget days, even if day closing is flat or something, they are fairly volatile days. So it can swing both sides up and down, and it is not good for metal piece to be sitting on a naked, unhedged position, which can technically cause you unlimited loss, right? And risk management is everything, right? So if this happens to be one of those events which have a big move, then the naked future or option can end up being a big loss also. I mean, agreed, it can be a big profit also, but it can also end up being a big loss, right? So don't take that stress of unhedged huge positions. Don't sell naked futures and options is what I would say. This is not investment advice. This is just metal piece advice, right? The third thing is, now that we have said don't sell options, I would also say don't play one particular variety of option buying game. And that one variety is this, right? Most beginners think that boss budget hai aaj so kuch to hoga, ya to upar bhayankar jayega upar. People will think it will go really big up or really big down. Therefore, they can make money by buying call and put. This is a myth. The problem with this, as you have seen in the historical analysis, it does not always work. And that is because people who are selling options are not idiots. They price the options very high. So if you look at the premiums of options of budget week, you will see that it is very high. The implied volatility is very high. Therefore, the break even which you have to have, right, will be very far. So on budget peak, if you want to buy call and put, if you have to make money, the movement that you need on either side will be a really, really big move. And I don't know, it's not easy to happen, right? And then there is, of course, some people buy one-sided YOLO, big single-side bets. I mean, yes, you can get lucky, but again, please keep in mind that although it is not as bad as buying both call and put, even if you buy only call or only put, the break-even can be really far away. And I have one last point to ask you. Put your hand on your chest and answer this honestly. Let's say you bought a lot of call options, right, or put options, and market gave you the move that you wanted in one single side, mega big move. Will you actually hold that thing when it is making profits? Will you let it run, or will you cash out early? If your answer is you're going to cash out early, then probably it's not a bad idea to. Probably it is a bad idea to buy a lot of options, because if you're buying a lot of options and if you're not capturing the big move and cashing out early, then probably it was not worth it, right? So that's another thing. Now I said ki boss, future mat karo, option sell mat karo, call option, put option, buy mat karo. Then what is this like? What is this bet saying? He say don't trade futures, don't sell options, don't buy options. So what do I do? Right? So I would say, as always, is the best thing to do probably is to trade hedge strategies. And I'll be very simplistic this time, right? If you're trading on option day, budget day, trade only very simple strategies like a bull call spread, a bear put spread, or if you are very, very strongly thinking it's not an event, it's neutral, do an iron condor, right? The good thing, I'm saying this for a simple reason. It won't be stressful. Your max profit is limited, your max loss is limited. No matter where the market goes, you don't have to worry about anything. At the end of the day, it will expire and you will take a small profit or loss, a small or big depending on your bet size. And beach ka volatility and all, it won't create drama for you, right? So please do. If you are thinking of trading, ideally if you don't trade budget day, that's also fine. But if you feel like trading on budget day, probably the right thing to do is spreads which have very limited profit and loss and extreme risk management, right? So then there's a question which you might ask, why can't I just achieve the same results by keeping a stop loss order? Then to my losses will be small. So first of all, my problem is, most people don't disciplinedly stick to their stop losses, right? That's one. It's very difficult. Haath nahi chalte kabhi kabhi. That happens a lot. The second thing is, there can be mega volatility and you can get stopped out quite a bit, right? Like in volatility, your stops will get unnecessarily hit. That's a problem. There's another problem that if you are putting your stop loss as a limit order, it might not even happen. At one price trade happens, then there'll be a gap and a trade can happen and you will be stuck with an order without the stop loss getting triggered. And so the alternative is you can keep market stop loss. But the problem is, if you keep a market stop loss on a very volatile day, it's very difficult to predict at what price your market order will get hit. And if it's a freak trade or something, it will not end well, right? So don't do this stop loss order business. Trade only spreads. Spreads have a built-in risk management, built-in max loss with it. So it's much, much peaceful to manage. It's much, much safer from a risk management perspective to manage. So my fifth point is, even when you're trading, right? Two things very important. Pay attention to the bid offer spread. On event days, especially on options on volatile instruments, the bid and offer will be very far away. Even if you're trading Nifty or Bank Nifty, you can see wide bid-offer spreads. But if you're trading single stocks, you can see very, very wide bid-offer spreads, and the lot size is also high. So for example, if the bid and offer is 1 rupee apart on a stock whose lot size is 2000 rupees, then for every trade in doubt, you are unnecessarily spending 2000 rupees on spread alone. Forget the money you make, right? Spread alone costs you 2000 rupees. So please pay attention to bid offer spread. That is how wide the bid and offer are with each other. And of course, do not place market orders because bid offer spreads can be wide, and always try to stick to limit orders if you are trading, right? Volatile and day market orders are generally a bad idea. And my last tip, right, is that please keep yourself isolated from noise. It is budget. A lot of opinions are going to fly around. It's not like anybody knows anything. So I'd say don't switch on the TV, don't read the news, don't listen to your friends, don't open WhatsApp message from your neighborhood stock market account, right? So because if you want to do it, pay attention to charts, pay attention to open interest, FIDA data, etc. It helps you get a sense of where the market is positioned. But even so, on a mega event, maybe OI, FIDA data, these kind of things might not work. Maybe chart can have some possibility of working, but in general, not a good idea to base your decisions during extreme events on OI, FI data, charts, etc. Right? But look at all of them because it gives you always additional information is better than no information. So that's that, right? So this is our session about how to trade budget or how to not trade budget. Even if you don't trade budget, it's fine. Market is always there. There will be plenty of opportunities for you to trade. You don't have to jump into trade ki yaar chance nahi milega type. So it's okay, right? So the most important thing in trading is that you preserve your capital and you survive long enough to learn trading, right? So that would be what my thoughts would be on the budget day trading session. Hope you found this informative and helpful. So good luck for the budget day. Thank you very much. Bye.